Test. All right, is that better? Should be good. Okay, so I guess let me go back to the beginning of what I was saying. Apologies for that. Let me go back to the beginning. What I was saying was that I started off talking about how this is this was not a day for me to trade futures, but mostly only because I was away from my desk at the office, and I was actually at home this morning, and I wasn't able to have all my screens and everything in front of me. So just as kind of a caveat there, and this is where I was showing you earlier, I did nothing, like literally. This was just a small trade I had. Just remember when I sent you guys the trend line break? Well, guess what? That's the trend line break, and I never added to it because you can see we stopped going down. And this one was just a mistake. I just started and I said, okay, I got to go on the webinar, and I stopped. So just to be very transparent, this was not a day for me to trade futures. And again, mostly because I was away from my desk. But let's say that it was an aggressive day for some of you or whatever. And how would you have been reading it? And this isn't really about futures trading. This is mainly about the ADS-PD, but I couch it in the, what's the word I'm looking for? You know, it's in the context, and it's very much within the, you know, within the realm of short-term trading, because those are the types of signals that the ADS-PD gives us, right? So that's a lot of what we can glean from it. Okay. So lots of questions today about how to read this thing. Let's start from the beginning of what is the most important thing to understand about this particular indicator here, okay? Firstly, I've said this before, and I can't stress it enough. Please do not come into this endeavor thinking that this or anything else is going to be a holy grail and is going to tell you exactly what to do and when to do it. Okay? For that, you should sign up for Wise Trade, and you should watch the red light, green light, yellow light. I don't even know if that still exists, but those of you who've been around for a while, you know there's this thing called Wise Trade that like puts up a little semaphore or something. I have no idea, like red light, green light, yellow light. And if it's a green light, you buy, and if it's a red light, you sell, or whatever. Bully for them. This sort of thing, at least something that works consistently, doesn't really exist in the market. So I would urge you to stop looking for it. And I would urge you instead to start educating yourself on how you can figure it out. Good one, GD. How you can kind of figure it out yourself and gain understanding of the interplay between all these things and how they work, so that you can make informed decisions on your own, okay? As opposed to looking for the needle in the haystack of some holy grail that will be like, well, I just need this thing so that when this thing does this, I do that. Nothing works that way. It just doesn't work that way. This is a much harder game than that. So how that applies to the ADS-PD, what I want everybody to go into this with is, don't be too rigid in your thinking. Don't assume always, for instance, that, and today is a perfect example, that when there is divergence of the unweighted being stronger than the weighted, that the market has to fall apart. It does not have to. Okay, it does not have to fall apart right away. The odds are that it probably will soften because it could be unsustainable. But there are situations where the market will just, keep rallying onward, even though this divergence is there. And look at how divergent it is, right? We clearly see that the weighted, unweighted, there's a difference here, right? And yet, if you had looked at it here and said, okay, well, look, these stopped rallying and this kept going, this would not have been a good short at this time. This would not have been, none of this would have been a good short. Really, the only short kind of that made sense is when I told you the trend line was breaking, right? At the 30 minutes ago when I sent you that. Because if you look at it like this, right, look at the lines that I've drawn. There's no short here. It never, even the most steepest of trend lines, it respects. Then you could make the argument that there's a short here, which is 40.36. But where does it go? Look at the chop, like 15 minutes later, rip up, right? I mean, there's scalps to be made here. You see what I'm saying? But now then here in the middle one, you have 1 touch, 2 touches. So you establish this trend line, perfect bounce, false break below, rip higher, almost to the prior high. Do you see what I'm saying? This is a difficult environment because it's non-trending. And what I want to point you to is, to me, what this is saying here is perfectly telling you that, because the scenario that you want to see when you are doing these setups, which are trend line breaks, okay? The scenario you want to see is this underwater down in here, when everything is already, when the cumulative number that is creating this indicator is less than 0 and trending down, that's when the trend line break to the downside works. And I don't want to oversimplify this, but I must be very clear here, because I get all these questions all the time about how do you trade futures? What do you do to trade futures? Do a webinar on trading futures. Okay, I'm going to give you the secret right now. And I have no problem telling you that, because it's no real secret. And B, it takes years of practice. Like, even if you know the secret and you just started last week, it's not going to help you. So the secret is simply this, or the technique, or whatever you want to call it. It's nothing but trend lines, 5-minute, 15-minute, and then go down to a 1-minute to hone the entry if necessary, but don't look at the patterns on the 1-minute. Then beyond that, it's movements toward or away from the VWAP. I fade the VWAP if I rally to it or I come down to it, if the context is right. So if I know that we're having an inside day that's choppy, I always fade the VWAP for a bounce. If I feel that the momentum is strong enough that the VWAP will break, I will buy the VWAP when it goes through the other side of it. And I use all of this to confirm whether that's a good idea or a bad idea. That's it in a nutshell. Literally, that's all I know. That's all I do. I don't use any special indicators. I don't use moving average crossover, et cetera, et cetera. I don't care about about economic data, et cetera, et cetera. Trends it works all the time, and it works to the penny. And this is why I always send you guys snapshots when it's important. Just like, again, half hour ago, I sent you a snapshot that said, hey, look, the uptrend RTH only is going to break. Well, what did the ES do since then, right? It broke a little, rallied back, but essentially the market is quite down from there. That was at roughly 40.15. Now we're at 39.90, right? So if you could have held on through that chop, or maybe you have a longer term outlook, that's all you need. All right. So that's basically it. So back to what is like important about looking at this. Sorry. So we've already talked about divergence. So yes, the divergence matters. And yes, you want to be in a situation where you may fade the market from top to bottom. You may fade an up move if you see this divergence, but you've got to have other context confirming. So to me, when I look at how strong this was in the morning, right? To me, it's not a fade. And again, I just explained to you, I was not trading futures today, but I would not have been fading it. Why? Because it would have been going against this. And some people get caught up in the nuance of saying, yes, but the unweighted is so far above, it has to fall apart. Well, look at today. It took hours to fall apart. And what if you were fighting it all that time? Short, lose money, short, lose money, short, lose money. Do you see what I'm saying? Don't fight this. That's one of the best rules to follow, is if you can just bias long when all this is positive, you'll be so much better off. And bias short when it's negative, you'll be so much better off. It will work so much better in your favor because you have the sectors pulling in the same direction as you. And the ES can only move. The ES can only move if in that particular direction, if those 11 sectors are moving in that direction. Okay. So that's how you would look at that. All right. Now let me just put this on a bigger one so we can look at some different days to get a better idea. Okay. So now beyond that, you want to use this in the fashion that you want to understand when there are days that are more directional than others. Like first things first is, this is Friday roughly. When you have a day where you have a lot of activity on both sides, and you can see after like by midday here that there's been activity on both sides, probably you're going to be able to do responsive trade on those days against the VWAP. Or more than likely, you don't look at it as, you know, major follow through on any move. You look for smaller moves, you look for short-term trend line breaks that'll go to a prior low, prior high, whatever, but be aware of what kind of chop you're in. It doesn't take much for the ES to reverse course quickly on a dime, especially in higher volatility when you have sectors that are out of sync. So again, as I always say, respect this. Be respectful of what this is telling you. And, you know, when you've got a back and forth like that, it's going to be more of a, you know, quick hit kind of type situation, and you'll be able to fade, and you probably don't get a lot of directional movement. Okay. Now, that being said, you can also pay close attention specifically to this day when you go positive, when you go negative. Like this one to me here is a big change. This one, not so much, because notice that it doesn't go anywhere. And this is one of the reasons why I use the 5-minute time frame, because I want to get these confirmations quickly, whereas I may have the rest of the charts on 15-minute. But in this, I need to see the histogram printing constantly to either confirm or deny what's going on. So for instance, let's say that you were inside of this exact time period right here, and there was a short setup. And again, the setup could be whatever, fill in the blank, trend line break, moving average, whatever, that doesn't matter. There was a setup to go short. Well, because I keep this on a 5-minute, these bars are printing pretty quickly. I better see another bar print below zero very quickly. But notice that that really didn't happen when you look at this, right? It printed a tiny bit, another one, and then boom, the next one was up. When you see that the next histogram is going up, I'm just giving you a hint. Let's say that you were in a short. That would be a good opportunity to hit the button and exit at market and take a loss. Take a small loss as opposed to a big loss. Don't hope. Don't think of it as like, oh, it might just fall back down again. Well, probably not, because if the histogram did that, then that tells you that the 11 sectors en masse are all pulling in the same direction, or at least, you know, the weighted ones or whatever, and they're pulling at least enough in one direction that it changed the tone of the indicator very quickly. All right, this is important. And understand this. This is a cumulative number that starts at the open. So if it's going to change the tone quickly like that, you can be sure that it's a pretty big change, because the change in that 5-minute bar of the histogram and of the indicator is not in relation to just the prior bar. It is a cumulative number that starts at the open. So it takes a lot to shift it like that. So if it shifts like that, respect it. Okay, this is very, very important. All right. Next thing I'll tell you is pay attention to the depth. And this is where I've kind of changed my tune recently. This is why one of the reasons I wanted to talk to you guys in this webinar. I'm starting to realize, and again, because this is new, you know, I haven't used this that long. If you recall, my early comments were, don't pay attention to the absolute number. Well, I've started paying attention more to the absolute number, because when it becomes extreme, understand that because it's cumulative and it's adding from the open, like look at Thursday. Thursday obviously was very bearish, right? Look at how extreme the reads got. That number, which is again an arbitrary number and has nothing to do with 500 on the S&P, because we're using the 11 sectors and we're taking a percentage gain or loss from the open and we're giving it a multiplier times its weight. It takes a lot for that number to get minus 600, minus 700, minus 800. So that also gives you an idea of how far the sectors have moved from the open, given how this number is. Okay. That doesn't mean that there can't be good trades to be had when this is minus 200, plus 300, whatever, but just be aware of that. That kind of should give you a little bit more confidence, or at the least, keep you from fading it, right? Don't think, when you see these readings be very, very strong, it's hard. It's much harder for the market to turn, because the momentum is there of the sectors really, really pushing. All right. So keep that in mind. All right. What else can I tell you about this as I've been kind of learning how to read it? Okay, next thing. I'll make this bigger so we can see it right here. Okay, so look at this mark here. It's very common that early in the session, okay, you might not get a read right away. I have found that it's better in the market in terms of day time frame trading to wait with this indicator until you get a read. Now, the first thing you need to understand is you will not get a read in the first 5 minutes. So unless you are a really aggressive trader who has lots of experience in fading opens, okay, just understand that this indicator is not going to help you at all unless you have it on like a 1 minute or whatever, because on the 5 minute, because of its cumulative nature, it will not start giving you a read until 9:35. If you have it set to 9:45, you won't get a read until 9:45. All right, so this is important. So notice that here in the right here on the 9:30, right, we don't get anything, right? We're here, and then we get our first read here at 9:35. And then again, you may be thinking, okay, is it long, is it short, or whatever? Are we having confirmation? I'm noticing that in the beginning, for the first couple minutes, the market actually went down, and then boom, it was off to the races. This is a clue, I would say, on the 940 bar. When this starts to go positive, right, line it up with this, and we'll put it on the 5 so they're both the same. And where's 930? Right here. Look at the first bar right here. This bar is 930. This is 930 to 935, and the initial opening drive is lower. And yet, and here's 935, lower still, and here's the 940 to 945. And again, what I was saying is, you watch this closely. If you were short here and this was going to continue, well, this certainly shouldn't be printing like this. It should be printing the dead opposite like this, and you should see a purple line going down. And instead, you got this. And this is a really quick way, and this is one of the reasons why we came up with the indicator. This is a really quick way to get a good read on what's happening under the hood, rather than staring at a sector minder window with the 11 charts. Like I keep saying, I'm a big believer that you should have the 11 sectors up if you can. Right? You should have the 11 sectors up on toss, and I guess, right, which I have like this. Right? You see this is what I always talk about the lines. But just looking at this early on in the session, that's very, very difficult. It's really difficult to kind of take this all in on the session and get a read on it. And let's just keep this up for one moment if we could, because this is what I have to stress to you guys. Hold on, I'll just fix this a little. There. This is what I have to stress to you guys, is that, this over here is a condensation and a perfect, just consolidation of all of this. And it is absolutely perfect and one-to-one, and it's not lagging, and it's exact. And I think it's just absolutely fantastic. I can't say enough about this. Like, in theory, you could just have this up, and if you could just look at it and say, okay, I know that these are the heaviest weights, so the ES is going to mostly move according to these 6, and these are the lower weights, these 5. Okay. But, that still leaves a bit to interpretation, because you have to look at chart patterns and say, okay, well, look at this XLK. Is it going to break here? Here's the open. Is it going to break? Okay, it did. Oh, look at this healthcare. It's so strong. Okay, so here's something I would do. Okay, I'll draw a trend line here, and maybe when healthcare breaks, I'll short the ES. Okay, and I'm not saying this is invalid. These are good ways to think. This is stuff that I look at all the time, right? I constantly keep going back to this chart, because I know that the futures can only do what's inside of here. No ifs, ands, or buts about it, because when the market is open, the futures and the cash are equal. When the market is closed at night, this doesn't exist. And what are they trading off of? Oh, the CPI is going to come out. Oh, this happened in Ukraine. Oh, blah, 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 etc. Has nothing to do with the market. But during the course of the day, it can only be glued to the market. These things are inseparable. So the better handle you have on what's going on here, the better handle you have on what's going on in the ES, And again, like I was saying, this is a beautiful condensation of distilling it all into one quick thing that you can look at. And if you look at this starting at 940 here and moving along the x-axis along the time here, right? Look at how it absolutely fits what's going on here. Let's just start from the top, right? Look at the beginning of the session in tech. Look at healthcare. And here, and by the way, this circle that I just drew here is very important. Just that one circle in the XLV, or just having these 11 charts up, should have told you right off the bat not to fade the ES. Do not go against healthcare. It's the second heaviest weighted sector. Do not fight the trend. Don't fight against healthcare. All right. So it starts going up. Look at XLY, discretionary, chopping sideways to higher. Financials, straight up. Communications. Right. Another one, straight up. Paula Abdul. Industrials. So if you look at this, and the reason I'm circling all these is, do you guys realize that these charts are actually cleaner than the ES? They look better than the ES. The ES didn't even look this good, really, right? The ES was kind of more back and forth. Some of these are just cleaner trends up, right? Like this one, for instance. Utilities don't matter much, but you get my point. All right. And only when you started to get this stuff falling apart, which I guess you would read as this here, right? Noting the move down, probably here and here, right? Does the market start to fall apart a bit? But even then, it's not, it's just not all that clean. All right. So this is important. I just wanted to bring that into the discussion, because I feel like it all kind of goes hand in hand. So that's something that I have on a separate screen. And again, as I've been saying forever, get more screens. Get more screens. That's the best investment in yourself that you can ever make in this game. All right. Let me think. What else can I tell you about how I would read this? All right. So now we are still failing to go negative. Okay. This is important. I sent you guys a picture of this in a prior session this week. I don't know. Today's Wednesday. Maybe it was yesterday. Maybe it was the day before. If you remember, there was an alert I sent that said, this still never got positive, right? That's what it was. When I said that when there was a short covering rally and I said, never got positive. Okay, that's important. No matter, I shouldn't say no matter, because I wanted to say like no matter how far down you are, it's rare that you would be that like, minus 1400 and you would get positive. You could, but it would have to be a real rip. But on a normal day when this is reading minus 400, minus 600, whatever, if it gradually starts to turn to the upside, okay, it's not more, I don't know exactly how to say this, but it's hard to think of it as anything more than a short covering rally unless this can get positive. So just think about that. If there's enough time left in the session, like obviously if we're having this discussion at 3:30 in the afternoon and the market turns and it never gets positive, well, okay, there wasn't enough time, because remember, it's cumulative. So it has to, it takes it a little bit more time to go from negative to positive. But if we're having this discussion at 11 a.m. and, or let's say later, this would make sense. Let's say like 12 or 12:30 and the market's been down for 3 hours from the open, and then it starts to turn. It's not that it's not playable off the lows, but if you think the market's rallying hard and you have longer term shorts that you want to cover, and this thing hasn't gotten positive yet, you're probably making a mistake. You should probably wait. So I'm just saying, just think about that, because this is important. When there is a real paradigm shift or sea change, if you will, of how the market is acting that day, when there's a real change in tone, you will see this indicator go from one side to the other. Even if it was deeply on one side, it'll change. All right. So just be aware of that. That's very, very important. All right. All right. Let's take some questions. I see you guys have written questions into the questions thing here. Nope. No questions there. Let's see here. How many computers do you use for all your screens? Just one. Just one. I don't know what kind of computer you've got, but just one. And it's not anything fancy or special. It's just a crappy Dell off the rack. Nothing special. I've never had a special computer or, expensive computer or whatever. Any computer that has a video card in it that can handle multiple screens. And nowadays they have lots of inputs where you don't even need like a big video card. And I only have 4 monitors now. I used to have 6. But now with the 49-inch curved in front of me, I only need 4. So I've, you've seen it, 1 on either side, portrait style, 1 big one up top, and that's it. All right. Yeah, if you guys want to talk questions about the weighted, put them in the questions box of the alert, which is the alert that I put of how to interpret. Go into that, go inside of that alert, and that would be a good place to ask questions. All right, about this. Pete says, is this how the indicator comes out of the box except for the monthly weight adjustments? Yes, that is true. That is it, Pete. Like, I don't add any profile or pivot point numbers to it. I don't add anything to this. So just to be clear, this is how it comes. You don't need anything else. Anything else that I talk about, Pete, is not related to this indicator. All right. So when you see me put a VWAP somewhere or whatever, that has nothing to do with this. All right. By the way, guys, Tesla 768, baby, 768. So that was a good reversal at a $50 loss, I think, because we can do that later, or maybe we don't need to do it at all because we are in the money, right? We're already in the money. We got a 775, 760 for next week, Tesla, and now we're at 768. Stock's down 30, and it's almost is it the highest? No, it's almost the worst performer in the Fangman Plus T, down 3.96. Netflix is down 4.09. So it's almost the worst performer. Oh, look, it just outpaced Netflix. You go, Tessie. You just go, Tesla. Just go. All right. What else we got for questions here? Thomas B. I have the indicator on TradingView, and I'm seeing thin lines in the histogram as well as red-green dots on the 0 line. You know what, Thomas? You have to email Barnaby for that. Barnaby is the gentleman who put that together over there. And he'll know better than me. I don't, I don't have, I didn't, we're just kind of in a deal with him to, put it out on a different platform, and it's kind of strictly a financial arrangement. I don't have anything to do with that. So I couldn't tell you. So that's kind of one of those things where, we didn't make it. So you should really ask him, but he'll know for sure. And he'll know exactly how to set it up. All right. What else? Gixer, what should be the strategy to take profit using weighted AD and how to anticipate short covering? Waiting for the AD line to cross 0 is too late. That is correct. That is correct. So, okay, so I don't want to say that there's a specific strategy, because I think that in terms of getting in and out of trades, because I think that the weighted AD should really only be looked at as one data point. And for me personally, when I'm doing stuff in the day time frame, I would not make a change to a trade to a weighted AD unless we were very close to the 0 line and it was like negative, positive. And let's say I was long and I saw it dip negative, I would just get out of the trade like that. But if you're in more of a trend, I mean, one thing you could look for is, are my histograms still still working for me? But honestly, why would you want to rely on that when all you really need to do to get out of a trade properly is drop down to a 1-minute chart, draw your trend line on the 1-minute chart, and follow that line down. And if you want to really collect all your profit, let's say you're short, well, get the heck out as soon as you cross the 1-minute, right? Just use the trend lines. It's not really, that would be a much better thing rather than try to figure out whether or not, the next line is, if the line is printing, up or down or whatever. Okay. All right. Let's see what else. Yeah. So remember, Gixer, this is everything that I'm talking about, remember, it's one data point. And again, this is what I keep stressing is you guys are trying to make it very absolute. Tell me exactly what I should do when the indicator does this, or is there a way to read it that's going to tell me exactly what to do and when to do it? No, then that doesn't exist. You will know exactly what to do and when to do it when you take in 15 different data points all at once. And after years of experience, you know which ones are most important, and you draw trend lines, etc. And you just get a feel for, how things are moving and when it's time to GTFO or stay in, right? But you're not going to get that from just like one indicator or whatever, right? It doesn't really work that way. All right. Roro says, how do you read a break below zero now compared to the levels where we were earlier today? Okay, this is a fantastic question because I look at it as confirmation, right? Like, look at this. You have trend lower. And now we've said this before, when it starts to go negative, that's when things start to get live, right? It's less than 1 p.m. just yet. And look where we are back at the lows of the balancing range. This could start to get interesting now. All right. So very, very interesting. I think you should look upon it as confirmation. And again, remember that it's a cumulative number from the open, so it takes time to happen sometimes. But look at it as stronger confirmation. Star Lord, I've talked about that ad infinitum, that there is not an indicator for the NQ because the stocks are too homogeneous. So I've said that a bunch of times. We tried it and it didn't work. Martin, we have it for TradingView. It's technomentals.net is the website. Yeah, there you go. Caesar has it. Daniel says, on the ADS-PD, do you draw any trend lines off of the vertical bars there? You can. Absolutely. Absolutely, you can. I mean, you see, do that. There's not a problem with that. That would be helpful. You can certainly do that. All right. Any other questions before I wrap it up? See what else we want to talk about here. It's Technomentals with an S is the other one. Technomentals with an S. Technomentals.net is where the one for TradingView is. Caesar says, do you ever compare today's numbers to the previous day to gauge strength of the move? And would you say the single most important thing the indicator can do is go positive or negative or vice versa? I would say no to both of those questions. I don't really look at it I do look at it in terms of gauging strength or weakness, but I wouldn't hang my hat on that only because I think there are just as many good trade setups when this thing is reading minus 500 as it is when it's reading minus 1300 or plus 500 and plus 1300. Okay. So don't get too caught up in that, really. All right. Martin, just email me at Ask the Shadow. Generally, we don't refund stuff like that because you've already purchased it. All right. But you can email me. What else you guys got? All right. I guess that is all. All right. You guys have a wonderful rest of the afternoon. And that's it.